Welcome, ladies and gentlemen. Happy New Year. This is our very first episode of 2022, and we are here to discuss a very significant topic in Nigeria's oil and gas industry, which is funding marginal field operations in Nigeria. And with me, of course, I have Dr. Felix Amieyeofori, our very regular guest. Happy New Year, sir.
Happy New Year to you. It's a pleasure.
And if you have missed our previous episodes where we give an extensive discussion on marginal field operations in Nigeria, you may want to quickly take a step, look at the previous episodes, subscribe, like, and follow us in these new discussions. Thank you very much. So, sir, before we begin, we would quickly like to just discuss the current financial situation of Nigeria's oil and gas industry. We want you to give us an overview. How does it feel like in this, the Nigerian oil and gas situation, the financial situation itself, regarding the current energy transition? How do we marry two of them together?
No, it's okay. Thank you very much. And, if you say current, the current didn't start now. The current is a reflection of what has happened before and what is happening now. Nigeria started commercial production back as 1956, 1958, the first export. And so we have been in oil and gas business, for more than 60 years. Unfortunately, up till now, our financial system has not grown up to support the oil and gas that, in quotes, is sustaining the economy. Our banks, our financial institutions are still not structured, capitalized to support the deep pockets. Because oil and gas business in the three streams of upstream, which is the exploration and production, the midstream, and then of course with the new PIA, these three streams are now very clear.
Yeah.
You have the upstream, the exploration production group, the midstream, the intermediate, transports, and all of the downstreams, the refineries, and all that. The industry is, for me, is still struggling, because I would expect that after 60 years, we would probably have had either oil and gas bank or energy bank, where, after 60 years, that can raise the multi-dollar required for investment in the sector. Our commercial, banks are trying to, but of course, if you even compare our banks to even Africa as a continent, our banks are still not that capitalized to support the deep pocket. Manufacturing, fine. You understand, the banks are mostly, structured for, but not in $1 billion, $1 million. And why did I go this route is because, one of the things that really affected the financial structure that has lingered up till now was the first, what we call IOC divestment.
Okay.
When they did the divestment, the Shell, the Chevron, the early divestment that gave back to, the Seplats, who are like the second generation companies, and then the ITO, the Aeroton, a lot of money. It ran into in excess of 10 billion, 10 billion, aggregate. And of course, the Nigerian banks operate under syndication because no one bank can actually support. I'm not sure even two banks can support the structure. So there was a heavy syndication to pull these resources together. And then, of course, that literally, when things didn't go the way, because crude oil price just went down south, the economics went off, everything just went awry. And up to now, the banks are still, struggling. Some of the assets, they are still heavily, indebted. The banks are really struggling because they syndicated to fund these assets. You understand? So that made the banks to reduce their portfolio, the oil and gas portfolio, because apparently, they are not big enough. They are not big enough. If you go to the African stock list and look at the Nigerian banks, in terms of, and look at South African banks, look at banks in Morocco, look at banks in Egypt. The Nigerian banks are not that heavily capitalized. Of course, on the continent, South Africa is the most advanced economy with a stronger financial institution than Nigeria has been talking about creating a hub. But it's not that easy because as I speak, the country debt profile is almost going, it might be 100 billion, while to pay revenue, and most of the economy is driven mostly by petrodollar. Even though the country is pulling away from, so it's all part of what is affecting the finance, in terms of the financial structure, the financial environment, the financial institutions, the leverages that are available, to support the economy, the sector that is funding, FX, the foreign exchange in this country is from the oil and gas. It's from the oil and gas. So it's more like a paradox. For me, it's more like a paradox. Though, of recent, because of this energy transition, the Nigerian Minister of State is now advocating energy bank, African Development Bank. People are going to say, why don't Africa have an energy? Because Africa will be heavily shortchanged, not only Nigeria. Financing oil and gas in the energy transition is like I said before, it will be more like a PhD thesis. Yeah. Because the European banks, are really, coming together to fund renewables, because the European economy is really, so that is the challenge. The challenge is historical. Then number two, there is also, the high level of perception of country risk, because the premium, Nigeria finance is purely risk. You cannot really run a financial community without, looking at the underlying risk, the associated risk. Yeah. And so far, Nigeria hasn't been very fortunate in terms of the risk associated with doing business in the country, political risks, and all kinds of risk. Every day you are hearing of a referendum, this section wants to break away, this section wants to break away. All of that, accumulates into investors' perception of how safe. And that's also for some time, the FDI, when I saw that Ghana has, Ghana is a small economy. Ghana is a small economy. The economy of Lagos State is bigger than the economy of Ghana in terms of GDP, actually GDP, but yet, people prefer to put money into Ghana to bring it to Nigeria. So those are the things. Those are the things that are, and then the stock exchange, the Nigerian stock exchange is purely it's not a heavy, it's not a very deep that can support, that can fund the industry. There are no heavy private equity structure in Nigeria. You understand? The private funding, all of the private equity you are looking at are coming from outside. The family office and all. Nigeria hasn't also developed that private equity structure where people can go to the private and say, look, let's raise capital for this. They are there because I saw it visibly in this marginal field. A few of my friends, oh, this guy wants to invest, this guy. And take, for instance, the marginal field they just did, signature bonuses are running into $6 million, $10 million, and so now for Nigerian to raise a $10 million, even if you use the CBN exchange of 415, 435, you are talking about 4 billion. How many Nigerians can raise 4-5 billion naira to pay signature bonus and then raise another 60 million for land? Okay, for onshore, depending on where it is, maybe you can be talking about $20-25 million. But for swamp and offshore, you'll be talking in excess of 40, 50, 60, $70 million. How many Nigerians? So what I'm looking at is, it's time that there should be the private equity structure in this country so that people can come under a private enterprise to be able to raise money. And then we also have this, downstream, these oil traders. It's also not, all the oil traders that we see that are trying to come in are offshore people. So Nigeria also, I see a lot of people, NNPC awarding, contract for people to lift oil. So the oil traders in this country also should begin to come in to say, okay, fine, let's do off-takers model. Off-taker model, I put the money, you get the oil, I lift the oil. So the bank alone cannot fund because the bank is not that heavily, capitalized because of their past dangerous experience with the divestments, and most of them, they are still thinking how to. Some of them have to sell their debt to AMCON. A lot of things are happening in the financial, world. And so those are the things, and then you have a major problem in the country. Besides all of these, the militancy, the crude theft, the vandalization. If you put all that into the economics of oil production, that is also a big negative incentive. It's a disincentive to funding.
Yeah.
You understand? So those are the things that, and then of course, if you now bring the current global topical, so Nigeria has a hydra-headed funding challenge because all of these are purely organic. They are purely internal.
Yeah.
So now if you now bring the external energy transition to renewable financing, squeezing funding for oil and gas, then Nigeria is really in the red.
So looking at,
but there are still, like I said, that is not, saying that there are no way out. But it is good that people come to the reality of what the country is facing. I've been involved in. Honestly, I didn't know it's this because I've been exposed to all kinds of, financing and investors and models and all that. I hear all kinds of things, and also opportunity I have to look at this global, view tells me something needs to be done specifically for the Nigerian industry if they have to move forward.
Yeah. You said something about some of these are internal issues, creating some kind of investor perception. When we have that kind of issue and that kind of obstacle, how can we then, the industry to the oil and gas, how can it attract funding? What model can you recommend?
No, I think for me, first of all, I've always advocated For me, the industry needs to take ownership of its own problem. Because you cannot wait for the government. Our government is not, in quotes, a very deep, government like the US or the UK or the advanced that are coming from a deep history. Our government is still finding their feet. Right now, I'm not sure whether we're running the model of government we're running, because people are still, you understand? Though it's presidential, but it's all, if you listen to what people say, oh, no, the Constitution didn't say this. So we are still, in a way, learning governance. So in that state, the government attention for a democratic government that wants to remain in power may not be as deep as the private enterprise who are seated and paying the brunt of all of this. The industry needs to come together. It's not government. Right now, the government is in transition. So all that the government is interested in is how to win the vote to remain in power in 2023. You understand? One government is in, but the party wants to remain. So the answer for me is, I've always said that it's not really a particular company. You understand?
Yes.
It's not really it's not a particular bank. You understand? It's not a bank that can solve it. It's not a company that can solve it. It's an awareness that, listen, we have a deep crisis on our hands. So let's get all of the industry people, let's get all of the financial related people. Let me tell you something. Whether Nigeria likes it or not, cryptocurrency is a currency.
Mm-hmm.
You understand? And it runs to trillions of dollars. So so there's a lot of financial model now that people can come together to say, what is the best way of funding the Nigerian energy? Okay. You understand? Now, first of all, before you say the best way, why do you say the best way? Because you've identified the challenges. Mm-hmm. You understand? So how do you take the challenges in one hand and a solution in the other hand and put it on the table? It's not going to be SPE versus the industry. It's going to be the entire people. It's not going to be Access Bank having a workshop. It's going to be the banks coming together to say, listen, guys, we have a problem. It's not also going to be the bank alone. It's going to be the other financial, non-bank financial environment. You understand? Mm-hmm. And it's also, like I mentioned, we know private equity is not strong in this country. Off-take-out, agreements where, those who are lifting oil. So all of these that we are seeing and we're enjoying outside, we need to bring it and domesticate it in Nigeria. To say, okay, you know what? All of you are lifting oil. Let's sit down. After all, Glencore, Vitol, all of these other people, Shell Trading, they are financing. What of you Nigerians who are lifting? Can't you come and let's look at a consortium, an idea? You understand? And then in that, you now need to say, why do we have the problem that we have? So it's not a government thing. Because the government doesn't have all the answers. It is a collective thinking. People need to understand that you can solve the problem as it is. But I do not believe that it's a bank idea. I believe Nigerian Stock Exchange is there. You understand? It's not a bank idea. It's all the financial, all the banking and the non-banking, all the people, traders, you understand, in the oil and gas industry, used to come together and say, listen, right now there is energy transition, which means increasingly every step, every day, we're going to go through a lot of challenges. And now, let me also tell you, the additional things that the energy transition has brought into cost, because now you are going to be doing what you are not doing before. Emission, recording, emission reporting, minimizing emission, introducing new technology to reduce your emission, in the environment. That was not there before. So there is an additional cost into your traditional cost. You understand? So if these costs are going to be increasing, of course, the other we mentioned about the environment, social and governance, ESG, or the SDG, all of these are coming together into financing the energy, especially the fossil fuel environment. So is there an answer? The answer is yes. What is an answer? An answer is an answer to a problem. So what is the problem? What caused the problem? Who caused the problem? Why the problem? I think we know the answers. So the next thing you do is honestly, we do. No, I mean, there is nothing so, you understand? We do. The only thing is you now need, if the private sector, you now need a political will and a collective will. So the answer is, does it exist? The answer is yes. We do have answers to the problem. But it requires a collective will that we need to provide the answer. Like the minister is going around Africa to set up African, development bank, working with, to say let's form an African energy bank. So how much do you want to capitalize on African energy bank? Because Africa needs to I think Africa has about, is it up to 120 something, if I'm not mistaken, billion barrels, you understand, of oil reserves. And it's producing about 8 to 9% of the global oil. Now, at the end of the day, Africa needs to think, how do we develop these oil resources if we are going to borrow money from Europe that doesn't want to, most of European banks are not willing to fund oil anymore because they are now renewables, you understand? So there is now a thinking. So if Nigeria comes up with this think tank, the problem of Nigeria is not as common as African problem. Though there are pockets, like I know we see Tanzania, Mozambique have issues with these are big LNGs and community and all that. There's a spillover effect that we are seeing on the continent, but it's not as deep rooted as it is in Nigeria. If Nigeria can fix their problem, they can also fix African problem. If Nigeria can fix their financial problem, it will be difficult to fix. Not that it will be difficult. Individual countries will, but I don't think individual African countries have the capacity to fix the African energy fund deficit. Because there is a major deficit, and they are all coming from abroad. You understand? So for me, that is the direction to go.
And I'm sure marginal field operators will be watching right now. I want us to move generate to specific now.
Yeah, sure.
How do they, the existing marginal field operators, how do they secure funding for their assets?
Yeah, honestly, and all of these are things that the marginal field people needs to put in perspective. I mean, I get involved in trying to get funds for people, and it's hectic. I've said before, some of these people want to see your spreadsheets. Some of them want to see the sales, because it's not enough to say NPV, IRR, ROI, payback time. All of those things are, you understand, they are just, I would say they are textbook petroleum economics, language or jargon and all that. The guys want to see whether you cook the NPV. The guy wants to see whether, if you say 3,000 barrel, whether you cooked it. Demonstrate it. Send the spreadsheet to me. Let me look at your spreadsheet. You understand? So it's no longer business as usual. Number two, you need to be able to tell the financier that you understand the environment. That you understand, first of all, your own environment. Secondly, the global financial, perception on Nigeria. And then thirdly, you also understand that energy transition is on the table. Yes. You understand? So if you don't, that is why there is paucity of funds. A few of them have paid signature bonus. But I can tell you the major challenge will be moving from signature bonus to developing the assets. You understand? And so, like I said, there are a lot of these options that they can look at. Because the banks may not, because now Shell is divesting. Other people, Mobil, Chevron, you understand? So the Shell divestment is talking about $2-3 billion. That is outside of maintaining existing operation. Outside of, you understand? So 2-3 billion, if it goes through, will go purely into shell divestment. Now, that 2-3 billion is being taken from wherever it is. So Marginal Field Group will not be able to access the same source. So it's going to be a creative way. And that is why, like I said, for you to secure funding, you have to be technically sound. You have to demonstrate that if I give you $10 million, it's going to do, maybe not even a $10 million, it's probably going to do a $12 million job. Because you need to optimize the money. You understand? You don't take a $10 million in the olden, in the past, people give you $10 million, you use it to run from here to there. You've not even started the project. Now, 10 million, you have to do a $13 million job. You have to show efficiency, time bound. You understand? You have to show efficiency. You understand? Because money is no longer that easy to acquire. Then you must also show strong governance structure. See, if you need to get money, there must be governance structure. The money is no longer going to be chairman, secretary, and all that. It's going to go to a company, a corporate organization, meaning that you must have governance rule to make sure that money goes to the right channel. It's not you get the money and buy SUVs and fly first class and hire private jets. No, because the money is no longer there. So they want to see how structured are you.
Yeah.
How structured are you? You understand? And one other thing is that is also common, because I've been involved in a few of these things, is how are you going to evacuate your crude? I give you the money on one hand, you can go and do the well, how do you sell it? So your evacuation model also must be literally visible, foolproof, clearly on the table, that if I bring 3,000 barrels, I'm certain that I can evacuate 2008, 2009, if not the whole 3,000. So you cannot say, well, I'm losing 35, because the funders say, hey guys, if you say you are losing oil, so I give you $10 million, you get a 2,000 barrel, but you are selling only 1,002. You are losing 800. So when do I get my money back? The capital plus the profits, the premiums and all that. So Marginal Field can secure funding, but it has to go beyond the traditional. Then the other one is this, because some of these assets are so contiguous, they are close by. Yeah. Pooling resources, like I keep saying, sharing rig, pooling resources, facilities, so that you can reduce your unit cost. You don't have to be a hero. And these are all the things that the financiers are also looking at. They want to see the nearby asset. You want to see the next, so that you don't have to reconstruct. You don't have to start from ground zero to do everything with $100 million. While a $100 million can do a lot more, you are using it to reinvent the wheel. This is not a time to reinvent the wheel. Yeah. This is not the time. There should be, for me, people should share, especially for those who are offshore, if you are so close, share a lot of bays. You understand? Share bases. Share especially for the new company that have never been in oil and gas, share offices. So that you reduce, you understand, significant cost. Don't try to be a hero. This is not the time, because it's not going to work for a marginal field that have to pay $10 million, $6 million signature bonus against $150,000 signature bonus. You understand? Now you're paying $5 million, $6 million, all of that. $6 million could have gone into first oil production, but you're using it to pay signature bonus. So you have to be much more efficient in your structure. You understand your structure? So yes, the answer is doable. Okay. But you must know. The other one that is also key is this. You have to have a robust community relationship.
Okay.
Because all those things now go into funding discussion. You understand? Because you cannot say that, I can't move forward. You've given me the money and I'm shut down. Days are counting, activities are zero. So these are things that the new marginal field guys need to really learn a lot. That's why we did something at some point to be able to educate, and that's why we're doing all these things to open up people. This is not a hero thing, this is not a henchman thing. The world is changing, the world has changed. You understand? Additional cost is coming in because of a net zero, effect. So additional reporting requirements will come in. It's no longer the EIA alone, but a lot of other emissions, net zero emissions, carbon, methane. All of these will put pressure on your financing. So it's not just going to be business as usual at all.
Thank you very much. So that was very insightful. I think one of the key things I took out from that one is maximization, efficiency, even deep down to things like community relations regarding people who want to seek funding for their marginal field assets. I think at this stage, if you check the screen of your video right now, you will see that we have shown you the title of previous marginal field focused episodes that you can go and watch and understand the full peculiarities of marginal field operation in Nigeria. Thank you very much. Stay tuned for the next episode.
Register now for the Global Business Summit coming up on 11th March 2022.